Hello everyone, welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live presentation. I'm here to educate and inform you on the proper use of Hawkeye on the live edge of the market. If you have any questions or comments, over on the right-hand side of your GoToWebinar control panel is a questions pane. Please enter your questions or comments there. I'll be glad to get to them in the order that they're received. If I miss your question, be sure to repeat it for me. As the number of people in the room, sometimes it gets cluttered and I sometimes overlook the questions. It's not intentional, but sometimes it happens. So please repeat your question. I'll be glad to get to them as they're received. I'm going to be covering for you Hawkeye tools, Hawkeye software in multiple markets on multiple platforms. So I will be focusing my education today on the platform and the instruments I show, but I will be breaking and showing you specific examples based upon your questions. So while it is a focused teaching, it is also interactive for your sake. Just want to make sure you understand that. We are here for educational purposes only. I want to make sure you understand there are some disclaimers that we have to produce before you. There's a lot of risk in trading markets and forex, futures, stocks, but there's a lot of reward potential as well. You have to understand what these risks are and be willing to accept the risks. We make no interpretation or promise or guarantee of any future earnings based on any past performance, because past performance is not indicative of future results. Make sure that you understand that you are trading with risk and that you are willing to accept that risk. And please consult a competent financial advisor before you put any money in these markets. We are not registered trading advisors, so we cannot give you advice. We cannot tell you, or we do not even solicit or offer anything to buy or sell with regards to futures, stock options, securities, or we do not represent those in any way. We are not brokers. We are not representatives. We're not introducing brokers, so we do not take the opposite side of anything. We are here on your side. We are here to try to help you as a trader to learn how to trade in a consistent and profitable manner. So please never, ever, ever, ever put money in a live trading account and start trading it until you have first proven that you can consistently and profitably trade in a simulated trading account with consistent profitable results. If you have not proven your trading plan before you start trading it in a live account, you're just asking for money, and I will say you're gambling. You're trying to do things on your shirt sleeve. You're trading off of fear and emotions. You just don't do it. You're putting way too much risk on the table. So I want to make sure that we are coming from the same foot here. We have developed a suite of software tools that help you as a trader take advantage of these markets, to get into these market trends at just the right time, and how to capitalize on them. So if you have a written trading plan that follows a written set of procedures like we prescribe here at Hawkeye, then over time you should be demonstrating consistent profitable results. As you all know, I like to look at the markets right about 6 o'clock in the morning, Eastern Standard Time in the United States. I like to be watching for trends that develop either in the futures markets or crude oil or gold. I'm usually rewarded pretty well. This morning is no exception. Coming in just after 6 o'clock, right about 6:30, you can see that I have a signal to enter based upon my tools. The trend was already in a downward trending motion. If you were to look at the overall trend, you can see that overnight the open of the London session gave a downward trend, and there was overall general weakness in the overall trend of crude oil ever since yesterday. So you can see, based upon a recent spike high, Hawkeye volume was telling me, and the Hawkeye zones were telling me, that this was a reversal point and that price has a very high probability of reversing it and moving back down. And that's exactly what happened. We were targeting the $52.98, $53 price range. Not only did it hit that, but it drove through it. It came back up and tested it. And now we see that it's starting to continue its downward move. And so that's exactly what we were looking for. So when the trend started to identify the direction of the trade, I saw the multiple time frames aligned, shown by my 6-minute and my 12-minute roadkill, that volume trend heat map across multiple time frames aligned on my initial entry. So based upon my trigger bar, entry for the trade was given by the entry bar. I got a little bit of a late entry, but you can see that with my levels turned on and triggered at this point, you can see my initial entry point was based upon this level right here. Okay, so taking that trade, I instantly was locked into a sideways ranging motion. You can see right there that I was in there for almost 2 hours. I was not stopped out, but I was also not at any point where I could be taking profits. I would be looking at either a level 2 or level 3 based upon how price was expanding and based upon the level of volume that's coming into this market. Okay, so with that in mind, level 3 was my initial profit target, level 5 was my secondary profit target, and I had a 1 level profit risk on the trade. Taking that trade into account, you can see as just before 9 o'clock, the market started to rally and push out. Just like you saw here, we saw a nice close down into and outside of congestion. This also confirmed a break of the congestion. You can see right here, this was the first break of congestion. Okay, it consolidated, and this was the second break, a really nice strong break. So it pushed through and hit my profit target right at the level 3, which gave me about 18 cents off the initial trade entry. Then you can see that as it moved down, I'm continuing to move my stop, which is this red line here, based upon the Hawkeye stops or based upon the levels, whichever is lowest. I hit second level, so now my stop is either at a Hawkeye level 3 or the Hawkeye stop, whichever is less. Now, because of the number of contracts I had taken on the trade, I took this trade, profit, and I have a runner in the market. Whenever I have a runner in the market, I stop using the levels and I just continue to carry it based upon the Hawkeye stop. If I had more than one contract in the market, then I would be following the level rules. And our level rules give us specific criteria for following a trade, making sure that we are minimizing risk and always taking profits off at the right, correct ratios. In this case, a 5-to-1 reward-risk ratio is ideal, and looks like it was ideal for the trade setup as well. If I had more in the trade, I would be out of the trade already, but having one in the market, I'm automatically trailing that up until this point. So I'll go ahead and take these levels off to show that a little bit easier. You can see the automatic trailing stop is set in here, and the entry of the market was right there. I've documented the profit takes here and here. So Hawkeye gave me a very clear entry set. I already knew the direction of the trade from volume because it is really the only unlagged indicator. It is the only leading indicator in the market. So what we're looking at is direction and entry rules based upon pre-established criteria. And I knew what I was going to enter with. I knew when I was going to enter exactly before I even put any money on the table. That's what we're referring to on that. Okay, hang on a second. Someone is saying they're having some audio issues. Sound is good. Please exit and re-enter. Okay. If you ever do experience some sound issues with GoToWebinar, the quickest fix is just to go out and come back in again, or refresh your screen, or do something that would cause it to reset, because somehow it does glitch up every so often. And so if you do have sound issues, that's probably the best, quickest way to fix it. All right, does anybody have any specific questions with regards to this overall trade setup? I can go over the initial setup. I showed you exactly what I used to get me into this trade. I showed you how I managed the trade, how I stuck with it, how I got to specific profit points and took my profits off, and how I'm currently allowing my runner to stay in the market at specified levels until the trade is completed. So Marcel, how do I decide what you're going to treat for how long meeting what time frame? Um, I have these pre-configured setups. So I'm trading a 3, 6, 12-minute chart. I've already done back testing and I've already shown that these are really good time frames to trade in these markets based upon the setups and how long I prefer to stay in the markets. And I found that I can trade these consistently based upon my schedule with a consistent set of returns. So for me, I found a 3, 6, 12-minute time frame chart has been good to trade for either crude oil. I could also trade any of the other markets. Now this morning, crude oil was already set up, so by the time I rolled in, everything was already looking good for entry. So once I got my entry signals, okay, when I saw alignment of my multiple time frames, that was a great re-entry point on an existing trend. If I were to expand this out and show you, you can see the trend started way back here. Okay, it has gone in and out of trend every time. Hawkeye is sitting here telling me that there is a lot of weakness to the upside. The downside is the direction to be. So volume identifies that direction for me. So before the direction occurs, the volume is signaling to me that that direction is intact. The initial trend came in here, so I was not able to get the initial trend or the initial trade setup, but I did see a continuation trade setup right here. And so this gave me an opportunity to re-enter the trade based upon previous entry results. So if you are a Hawkeye member, you understand and know that this was the detailed topic that we discussed last week in our surgery class. We went down and focused specifically on how do you re-enter a trend that's already started, or how do you enter an existing trend? And this is exactly it. And you can see the results are quite good. The whole time, 2 hours, yeah, that was a little bit strenuous. It's okay, but I was preparing for the webinar and I was getting some other things going, so this was bearable. I was challenged a couple of times, but sticking to your guns, holding to the trend, the stops kept me in. My level rules held me tough in the market, and I was able to prevail. Had it come up and hit my stop, yes, I would have been stopped out. Yes, I would have taken a loss, but that's part of trading. And that's part of following your rules. You don't know at this point in time, okay, right here, you don't know if this is going to go up or it's going to go down. I'm getting all the indications that the market's going to continue to go down. I have the understanding of the overall market direction based upon my longer time frames. But like anybody else, I don't know 100% without doubt that the market will continue. So that's why I continue to hold. I know my risk. I've established a specific risk-reward ratio in my trade. I know based on statistics that if I have at least a 3-to-1 risk-reward ratio, and I've position sized myself such that I have at least 1% of my entire portfolio in the trade, I only have to be right 25% of the time, and I will have zero probability of blowing up at my account at any time. So I will always be in the market. I will always have a trading account. I'm always going to be set up to trade, and I'm always going to be focused on executing that plan. So it just makes things so much easier. How many things do I trade at one time? Sometimes I will trade up to 4 markets at once, but that usually is based on I usually don't trade multiple markets with crude oil. I'll usually trade multiple markets if I'm trading index futures like the YM, the S&P 500, the ES, the Nasdaq NQ, or the EMD, the mid cap S&P 500. They generally tend to trade when correlation is high, synchronously. So those I can generally trade at the same time. So I have a macro set up such that if I wanted to and everything looks good, the macro will automatically enter a position trade on all four of those markets at the same time. And I govern the trade of all four of those based upon the S&P 500, which I consider to be the big boy. So as the S&P goes, usually the other markets also go. So when the markets are correlated, then the trade progresses. And I determine the measure of correlation using my fat boy. My fat boy shows me the degree of correlation or decorrelation of the markets and shows me how tight those markets are together. So that's how I address that. Good morning, Christopher. Please take a look at gold and the S&P from early this morning. Okay, I'll be glad to. Before I have Mike has a question on the crude oil. Does crude oil look like a turnaround to the upside at this point? Short term, it does. You can see that we are starting to get some no demand volume coming in around this level. You can see that there's buying volume on a price extension with pivot. So this gives me a really good indication that there is weakening, but it's still developing. I can see longer term trend, okay, that we are in a new level, but you can see that's still quite large. So we still can get down to 52 or even 51.80 before we see any downside. But if we break a 52 level, or if we start to get down below a 51.73, then there's a pretty good opening of price down below that area. So that's going to be significant. But we can see that that's stretching right now. We have half of an isolated low forming right here. So longer term, this could be a good reversal point. But as you see volume, look, watch the volume. As price is descending, volume is starting to increase. So once this bar closes, and if we see this bar paint red, then we can see that this volume is still building and the price is still accelerating down. But if this volume bar paints white or green, then that is very indicative of a key reversal. So I would be watching that to develop. Anytime you see the volume weakening, or if you see that the volume on the push down is less than the initial volume on the initial push, then that gives you another clear and good sign that the trend direction might be over and we might be looking for a correction. But right now the trend is still intact. And there's nothing telling me that that trend is going to change. I have some signs of correction, obviously. So with that in mind, you always have to be taking that with a grain of salt. Good. I'm glad you. Volume is the key. Always watch the volume. Always consider the volume. If you want to learn the details of volume and you want to learn more of the advanced concepts I use to trade with volume, I really encourage you to come to my seminar here in Charlotte. In 1 month, we're going to be holding an all content, no hype seminar that's going to go through the details of Hawkeye, the details of trading with volume, the details and advanced training, not only the basic training, but the advanced training as well, of how to take these very same trade setups, how to identify the trend, how to identify multiple time frames, and how to use these tools in a proven trading plan that you can use to be consistently profitable. For more information on that, just go to our website, hawkeyetraders.com. And let me put that link in here for you. I think I've got it here somewhere. Well, I can't find it. I'll just have to type it in for you. I think that's it. So let me copy that and paste it in to make sure it's correct before I give it to you. Yep, Seminars Charlotte. Seminars Charlotte, that's the one. That's the one. So let me send that to you. Make sure that you got that. So please, if you're interested, come and meet me. Come and meet the other Hawkeye traders that are going to be at the seminar. It's going to be content packed. It's going to be crazy. But we're going to spend some social time together as well. We're going to get to know each other quite well. And then we're also going to learn and get knee deep in trading, knee deep in the Hawkeye tools and the rules. Okay, so make sure you go over, read some information about this, and then sign up for the information to get registered to attend. If you have any questions, if this is the first time you've even heard about it, just send us an email, HawkeyeTraders.com, team1@HawkeyeTraders.com, and we'll be more than glad to answer your questions or to get you more information on getting that started. I heard in the background, I don't know if you heard it or not, the price was filled right here, so I got stopped out of this trade. So this trade is now over. So let me pull in and give you a last minute. So let me say it's a control right there. Oh, that's the wrong one. What is that? I thought it was a control F. Oh, sorry, control F3. There. All right. So from this particular trade, 2 contracts off at 18 cents, 2 contracts off at 30 cents, and 1 final contract off at 10 cents. Give me a grand total of 60, 70, 80, 96. That's 106 pips, 106 ticks that I was able to take off out of this trade, just following standard rules, following my trade plan, minimizing risk, maximizing my reward potential. Following the rules. That's all I did. 106 ticks off of the crude oil. Okay, that's nice. $10 a tick. Okay, Christopher, you want to look at gold? So let's take a quick look at gold now that I'm not distracted by this any longer. I will pull over my handy dandy market analyzer over here. You can see that gold is currently in an uptrend. It just started. It had some weakness here. It looks like it just started in a uptrend. So we'll go ahead and click on that and pull it up. But we'll see the value of that uptrend and see if there's any substance to it. It looks like gold also has been on a pretty nice downtrend based upon the hourly charts. You can see that based upon this current push down, it will have broken through this lower support. Okay, so now 1200 is a nice hard level. So this has been broken, but where you can see this is a long established trend with a very good trend direction. So this does not look like it's going to taper off. Anytime you see your zones giving you a nice series of trailing resistance or support levels, here you can see all these supply zones, that's a real good sign of a strong trending market. And the trend is down since you have all supply zones. If you have an uptrend, you're going to have a lot of demand zones. But this again shows that the current support level, which was nice and brown, has given way and now will disappear after this bar closes. Our next target is now going to be 1200. Upside resistance will be about 1217, and that's the focus of the longer term at least. So based on that, you know, if you were to take any trade up, make sure and you're trading these as correction trades only. You're not going to be looking for home run trades. You're not looking for a 3 or 6 or whatever level ATR profit target. You're looking for correction moves. Take your profits when you get them, but look for the longer big moves in the direction of the overall trend, which is down for the gold market right now. I haven't seen any signs yet that this is a key reversal. So for now, continue to trade in the direction of a downtrend. But you can take uptrends if the signal is there, but keep your profit targets tight. That's how I would trade these. So you can see this is not a clear entry. You've got an initial signal off of your first time frame, but your first time frame momentum, your second time frame volume, that's not an entry. So even though you've got some clear signs of correction going on in your 3 minute, 6 minutes just not ready yet. We're just starting to see some alignment in the 6-minute, but your 12-minute's not ready yet. So we still have to wait for this trade to develop. I would like to see a correction, a push up, a pullback, and correction. If I see the correction price does not exceed the prior correction price we see from volume right here, and if that prior correction price has lower volume, so if I'm looking at my magnitude of my volume compared to the magnitude of volume here, if this is lower, that almost guarantees I'm going to have a retracement and price pushing back up again. Again, volume is the key. If you're here for the very first time and you don't understand volume, volume is the key and is the foundation for everything that we do at Hawkeye. If you haven't got started with volume yet, then I want to give you a special for being here part of my webinar today, Hawkeye Volume Starter Package. And let me show that to you right here. I don't have any of these things ready, and I should have had them ready, so I should have already had these done, but there we go. Paste that in. If you take this link right there, hawkeyetraders.com/WED, okay, then that'll give you a link to get started trading Hawkeye using Hawkeye Volume. For $97, you get the entire volume starter package. That includes the volume paint bar, volume radar, pivots, and wide bar. Let me show you a workspace that has all those on it right now. All right, you can see the tools that you see on the screen right here are part of the volume starter package. You can see they are part of our overall larger packages, but it is the key. And understanding how to use volume and to see how volume works in these markets will give you a clear understanding of application and price. And of course, the details and use of all of these are going to be covered in depth in our seminar in Charlotte here next month. So please, if you're on the fence, then jump over, and I'd love to see you. I'd love to start teaching you some of these more advanced concepts of volume, how to allow volume and read volume and understand volume and prices interaction, and how well they are at projecting future market direction. Excuse me. Okay. So that's gold. Let's look back at the S&P then. All the markets had a really nice rally earlier this morning, and I'm sorry that I didn't get to trade any of them, but I do want to see those because they all had some really good entry signals, and I like the way they were looking and trading this morning, although I never did get a chance to participate in any of those. Okay. Oop, let me unlock those. All right, so the S&P, looking at a 3, 6, 12-minute chart, of course. Longer term, I always like to see and set myself up on a longer term setup based upon my zones. I have my zone set on a 60-minute time frame and looking at a 60-minute price. Relative to that, we came into overall support. You can see that price came from that level, established resistance. Now we have a nice series of downtrending corrective moves. We have come back into a triple layer support. We can see that the level has turned gold. Now we're starting to trace back up to a prior gold level as a target. So 2374 is the upside that we're looking at. If we break that, then you can see that that's going to also break our corrective downtrend, and we might be back in line to try to start challenging new highs again. But for now, we are in a short-term downtrend correction that's just starting to break out, but we've got to see this close and at least hit this target on the short term in order to break the downtrend. So that's the longer term. In line with that, the longer term is at least trending up, so we are free to take long trades and trade those according to our rules. So based upon the initial entry point, you can see initial target setup right here just before markets opened this morning gave us a nice entry. If the entry didn't trigger any profit targets, you can see there's a secondary entry there. You would have been stopped out on the initial entry right here. Okay, so if this trade were entered, this would have been a clear stop out. You got re-entry considered here, but not allowed. Here is another entry point right here, which was allowed and was able to be entered at. So this was the secondary entry after a stop here if profit was not taken. And looks like it's already gone into a good profit. But you always want to consider entering a market just before a market open. Anytime you get a signal right here like this, just before the markets open, you're setting yourself up for risk because you're always going to get these opening market jitters. And so there's a really good chance of getting stopped out or something bad might happen if you're in trades when that market opens. So if you're not already experienced at doing that, then I venture to say you will probably do good if you stay out of trades or close any trades that you have just before the markets open and then take the trades in the direction after the markets continue. Trading longer term, if you were just a regular 5, 10, 15 or 5, 15, 30 type charts, then yes, this trade would have been entered. You would have held through the pullback and you would still be long in that trade. You might be able to even see that in the Dow Jones here. So if we pull the Dow up, then you can see that that was the case for the Dow. The initial trigger entry for the Dow had correction but never stopped out and was able to hold up into the open of the market. This is what I was telling you before. You've got two reasons not to be long in this market. Number one, you have a corrective move that comes back, and look at the volume. See the height and the level of the volume? Let me pull this on and show that crosshair. Okay, see the magnitude of this volume right here? Now look at this peak and look at the magnitude of its volume. Notice how much lower the magnitude of volume is than the magnitude of volume on this peak. So a double top with decreasing volume is a great reversal signal. You know the price is looking at going down when you see that type of setup. Second, you see that this push up and attempt to sell was all red volume. So you want to see push-ups like this be green. You don't want to see them red if you think the market's going to go up. But you'll only see those if you know the market's going to be going down. It'll be red. And we got a pivot on top of it. So not only did we have a lower volume double top, but we saw a pivot high on opposing volume. Price dropped. Price dropped like a rock. And it's clear to see in real time as you're following the price, as you're following the volume. If you understand price and if you understand volume working together, then it's going to give you a very good advantage in this market. Okay, David, can you trade crude oil and gold in the same way on MT4? Absolutely. If you have data from your broker on the spot crude or gold, and I think many of the brokers today have futures and even equities data feed into MT4, then yes, you can use your Hawkeye tools to identify these setups and trade them just like I showed you today, even on MT4. That's right. I do not have my broker only gives me forex data. I'm using Oanda, so I don't have futures, gold, or crude oil data, but I know they are available. And I know MT4 traders who are also trading DAX and other futures markets on MT4. And I know some who are trading equities as well, stock CFDs and things. So absolutely. Good. This gives an initial trade entry point. You can see here's another. This one triggered a secondary trade entry point for a short in gold. I mean, the YM. So the short in the YM, we're following the signal that we got off of a sell-off into a supply zone. We are targeting 28.95 is our overall target. 28.76 is the real target. This one might or might not be supported, and if it isn't, then we're looking at it all breaking all the way back down to the 875 level. Okay, so this would be a continuation of an existing signal, and then here was a secondary signal to go. You can see alignment on both cases were shown by your roadkill, showing that the 3, 6, and 12-minute time frames came in line. All right, take care, Christopher. Thanks for showing up. Appreciate it. David, you're using Oanda 2 in a demo account at the moment, so may need to find another broker. Yeah, if you contact Oanda and find out if they will provide futures data, that would be good. However, I'm using Oanda also, and I currently do not have. I've not asked them though whether they have that data feed for me or not. You can see from the fat boy that the markets are turning and starting to roll over. The S&P has already gotten a head start. Looks like the Nasdaq, the Dow Jones, they're starting to follow suit. Crude oil looks like it's topped out as far as its correction moving. Looks like it might be rolling back over again. And the bonds have already very much sold off and have trended down considerably all morning. So that's another consideration to look at when you're looking at these overall directions, that the correlation is not there, but the overall direction of these markets are clear. From the KISS, we can see that the overall bias of the market is to the downside, but we do have some strong direction of advancing issues coming back, but you can see declining issues are still over advancing and is starting to curl up. So we can see that there is a bias to the downside on these markets. Okay, so initial signal short on the YM. The Nasdaq, we can see it's rolling over. It was strong and it's continuing to roll over. Now we can see there's a double top, minimal volume. We're starting to accelerate. We've broken our uptrend, but we don't have any signals to go short on that because it was already strong. Let's see what the S&P is doing. Okay, yep, same song, second verse. We haven't quite reached our overhead resistance yet, but you can see we have established lower highs, lower lows. We have gone into a congestion. This is a congestion breakout, so the trend is now down. However, the not enough to change the trend signal to give us any type of indication. So we do have an increasing surge of volume into price declining, but the level of decline is only to prior support. So nothing there yet. So the only signal that we've gotten out of any of these has been from the YM market. All right. You're very welcome, David. All right. Is this applicable to forex? Absolutely, absolutely. So let's go and take a quick look at some of the forex markets. Looking at the forex markets, the fat man is probably the similar tool to the fat boy that I was showing you for the futures market, but the fat man is specifically designed for forex markets. And what it does is it shows the individual relative strength of currencies like the pound, the Australian dollar, the Japanese yen, the Canadian, New Zealand, Swiss franc, US dollar, and euro. So from these, you can see that at about 7 o'clock this morning, the US dollar, the euro were all overbought, and they were extremely strong relative to all the other currencies. And the British pound, Japanese yen were oversold and extremely weak relative to all of the other currencies. So from that perspective, you start looking at a distinction between either, say, the pound, the euro, the pound dollar. You look at the yen dollar or the euro yen, then you're looking at really good potential trade setups. Okay, so if I were to go over and look at that euro yen and looking at a potential setup of the euro yen coming up into this just after 6 o'clock or 5 o'clock up until the 7 o'clock time frame, right? Then you can see that right there. You got 5, 6, 7 o'clock consolidation, consolidation. You saw the strength versus the weakness, okay? Strong and weak. You were looking for a potential reversal, but then you started to see that the Japanese yen started coming right back down into a trend of weakness, right? So a very strong long signal came as a result of this return to weakness. And so based upon that strong long signal, you were able to take some pretty significant pips until volume tells you that that trend direction and weakness is coming in, is telling you this potential direction trade is over. And hitting an overhead resistance on your hourly also confirmed the target was reached. Longer term, you can see the trend of weakness versus a trend of strength. You're only going to be looking for longs until you see that signal reverse. Okay, so really easy to see, really easy to understand and apply regardless of the market you're trading. If you notice, I use the same tools on the forex market, looking at multiple time frame alignments, multiple time frame zones. I'm only using a fat man because it's relative to those rather than the fat boy, which was on the other market. So the same application, the same rules can be applied to whatever market you're trading. In this case, I am looking at a 5, 15, 30-minute chart rather than a 3, 6, 12. I can use a 3, 6, 12 if I wanted to, but not really necessary. Absolutely, Majid. If you have purchased Hawkeye on one platform and you wish to switch to a different platform, then absolutely. Contact us at support@hawkeyetraders.com and we'll be more than glad to accommodate your request. And transfer your license over. You don't have to repurchase Hawkeye. We can just transfer your license over. Absolutely. Now, the volume is integrated and is a part of our entry system. As a member of Hawkeye, you get access to the membership area where you get access to our 3-step entry exit method. Helps you to understand the 6 ways the market moves and all of our on-demand teaching. We've got a lot, hours and hours and hours, hundreds of hours of online on-demand teaching in our video library and the resources to help you to not only pick up the concepts but to learn the tools and how to use them. And I keep showing these setups, but if we were to look just at volume only, then you can see the same concepts that I was trying to explain earlier. When you start to see basing, when you start to see a higher low and higher highs established, you know that the overall trend direction is broken. When volume starts to support the move in the direction of the break of your trend, that's going to help you to understand and to take that as trade directions. So it helps you as a trader to understand and know that. And so when you apply that to other rules, when you see this crossover of your stochastics or your crossover here or your MACD crossover point, it will confirm that this is not a good entry point, but this is. Okay. It will also help you to take that trade with a lot more confidence because you're looking at volume, which is the only leading indicator in the market to help you to make these types of decisions and to help you to position yourself properly in the market. Okay, so integrate that volume module with whatever you're doing right now, and it will help you to see. It'll open your eyes to volume and the concept of understanding volume and price. And then once you see that, then you can see why we use it with the other tools that we do, because it helps us as traders to have uh, a focus specifically on a market that we're interested in, with clear understanding that volume working together with price gives us clear entry points that minimize risk and maximize our profitability target or our reward potential. Because in these markets, we're not trading to make money. We are trading to manage risk, and we are trading probabilities. If you understand that, and if you understand the basics of volume and price, then your job's going to be a whole lot easier. Okay. If you already have the Hawkeye volume package, then I've got some upgrade specials for you. So if you want to get started with that, let me pull that up. I think I've got it here. Yeah, right there. Here's a link for you. Right here. If you already own the Hawkeye Starter package and you wish to upgrade to either the standard package or the professional package, then here's a link that will guarantee and lock in your webinar special rate, hawkeyetraders.com/upgrade. Oh, that's not right. That's actually gonna, let me see. Yeah, hawkeyetraders.com/upgrade. And that'll give you a link to upgrade from your starter package to either the standard or the professional package. Or if you're on MetaTrader 4, it'll upgrade you to the total package, giving you full credit for your previous purchase and locking in your special discount. All right, let me switch back over then. Most of today's presentation has been shown on NinjaTrader. Let me go back through, and now you can see there's my TradeStation platform. A lot of the same app has been showed and demonstrated there. Remember, I was telling you when price retraces back to prior support, then you should expect to see a stall in price, and that's exactly what it did. It came back down, hit support. You can see prior resistance level. You have an price extension with opposing volume, a nice pivot low. So you can see that price stalled at this point. We either will see price go enter into congestion, or this might actually be a key reversal. But based upon this hit and this reversal ping back, right, then that's a real good sign that this is just going to stall here. We've seen it one other time, but this is going to stall. The initial entry that we had has already gone right to our profit target. So this looks like a good stall point. We need to see a break below this level right here, okay, in order to see this trend continue. And if it does, I would look for it to hit at least 880. 2880 would be the target to the downside if this trend does not hold. But it still looks good right now. Well, I like to look at Micron. Absolutely. I would love to look at Micron. Micron has been on my radar. So let me pull that bad boy up. Micron has been on my radar. You can see we've gotten quite a few really good earnings results, but consolidation. It's really weak, but it's been on my radar recently because once it came back down, it started showing some clear signs of buying. I started hearing about it. Volume's really pushing it back up. You can see a nice entry signal came right here, right at where the price that we are right now. So 25.54 is current entry price on a long into this. You can see on the weekly and the monthly where we are clearly in a ascending and growth mode. So this is also a breakout, okay, of a nice pattern for it. So this looks like it's a good entry for a long on that. For Micron, I like the way this looks right now. The overall general direction of the markets are weakening. So looking at the fat boy on the longer term, you can see all the markets are overbought and showing signs of weakness or correcting. All right. But even in the midst of corrections of overall general markets, you'll still see stocks that come out and shine. And this looks like one of them right now. Volume is still building, but it's on a declining trend. Anytime you see a break of prior price, then you see volume. You'll see this kind of trending action, but I would want to see another confirming higher volume spike to keep this momentum going and to keep price going up. So far this looks good. It could correct. If it does even correct back down to the trend dot, that's acceptable. And that would put it right back down into checking prior support, but it might not check any less than even 25. So it might not even break below that based upon what the price looks like it's working on right now. I would probably target $30 if I were looking at the overall pattern of price, the breakout, and where it has been before, based upon my weeklies. Okay, you can see why it would come to stall at this point, but $30 in this range is going to be its natural resistance area. So I would be looking at a break of stall, high target price of $30, consolidation, possible retest of the highs, but still looks really good. And volume is very strong in supporting this trend. And the trend dots are still trending, and you can see we're still in a nice strong trend run. So I like this. Philip, is crude oil giving a entry sell signal on the 3-minute? I don't know. Let me check that out and see. Mike, Jordan, I was looking at a longer time frame. I assume that's what you wanted to see as well, but let me know if you wanted to look at that on an intraday. But I usually trade these on much longer time frames. Yeah, that's definitely a continuation short signal, but buyers beware, or sellers beware in this case. It did not establish a new low on the signal. Okay, it did not establish a new low, and we had already been stopped out with prior signal. So while this is a good continuation signal short, I would feel a lot better. I would feel a lot better if I saw new lows. This looks like a corrective bottom. This is also a double bottom. And when we see this double bottom like we saw here with lower volume, here the initial bottom, here's the secondary bottom, lower volume. Here's the third test, even lower volume. See that? So if I were to see this as a continuation short, I want to see strong volume, and I don't see it. So just because you get a signal doesn't mean you take the trade. It's good, it's a good signal, but if you understand volume, you're going to be putting probabilities on your side. And you're not going to get locked into any of these types of trades because volume's not supporting it. Volume isn't supporting it. Don't take the trade. The color of the volume is, but if you understand volume, which if you come to our seminars, you're going to walk away understanding volume. We're going to be drilling it into your head. Absolutely. So I hope you were able to follow that. 60-minute, we have an isolated low. We got 50% of an isolated low. This is so far, this is not an isolated low. We need to see this bar close for this to be isolated, and the high has to be greater than this. But right now we've got 50%, and this is a phantom. We have opposing volume in a demand zone. That's just telling me there's a real good chance this is going to correct back up again. And that correction might be up to 5274 or right to 5275 area. So we could easily see a correction back up to that level. And I got that from volume. Volume tells me that. And the volume is on all of the time frames too. I know what to see it. I know what to expect. Yeah, crude oil inventories here in about 2 minutes, 3 minutes. Okay, Forex Factory is a great source, but there's a lot of other news sources. But it's just this is a quick, easy one to see. Crude oil inventories are coming up right at 10:30. That will definitely affect crude oil prices. So keep an eye out. And it's probably wise not to be in an open trade prior to earnings or inventory announcements, news like that comes in. So I know I don't like to be in a trade when it comes out. So unless you're a gambler or a risk taker, or if you know something I don't know, it's just best to not be in the markets when that happens. Thank you, Sven, for the updates on the inventories, by the way. Appreciate that. The expectation of the inventory, okay, they're expecting it to be lower, which is going to make the prices go higher. See, they're expecting a decrease. Previous was 1.5, 1.1, so a decreasing inventory means increasing prices, but we don't know where it's going to be. But we do see a longer trend of weakness coming into this from yesterday. So maybe it's already priced in and it'll rally back up, or maybe it'll just continue to trend down once the solid news has come out. I'll hang around 2 more minutes just to see what it does. And I'll entertain any other questions in the meantime. The best way to get started trading Hawkeye is to take the special for the starter package. That's the best way to get started. That way you don't have to purchase the entire package unless you wanted to. If you're ready to take the plunge, then that really is a great way because that's the best value. You don't If you don't piecemeal it and buy individual components, it's going to cost a whole lot more than if you were to buy the initial package, and then you get everything from the beginning. Absolutely. All right, 1 more minute, and the data will come out. We'll see what to do with that. If you're going to be trading the news bar, I have a separate strategy that I use when I trade the news bar. As do most people. They all have set different strategies, different ways that they tackle and trade the markets after news, but there it is. Number came out. What is the number? It won't update for me yet. 8.2. That's huge. What? I don't think that's right. Look at that number. I, I can't be right. It's probably 1.2. But it's still down. It's still down from a 1.5. It's higher than they expected, but higher. Fake news, yeah. It's fake news. Don't buy the fake news. But it's not different enough from the expectation, the forecast, that's going to make a real big difference. I mean, in the short term, yeah, it rallied 20 cents, but 20 cents on a news event's not that big a deal, especially 20 cents on crude oil. It's not even going to break the downtrend. It's definitely going to make this paint as a pivot low, and it will show this as a true isolated low with opposing volume. So the overall direction of this could be correction, and I would still look to see this challenge at the 52.75, 52.80 range from this move, but that might be the only upward. If we break 52.90, then we definitely will see 53 and possibly even 54 again if that does break this downtrend. But it's got to break. I would look for it to consolidate and retest and then come back up if it were to do that. Yeah, Philip, if it were actually true, if it were 8.2 million barrels, whatever that refers to, then yeah, the price would be going down strong and hard. So that's obviously some typo. It's probably some goofball in the back office trying to make some money off the crude oil market. He's probably taking some shorts right now to the cleaners. All right, that's clearly going to be a 12-minute wide bar. I like to look at the 3-minute bar that posts. Once the 3-minute bar paints, there it goes right there. That gives me a clear indication of where price is going to be. If I see a close above this 3-minute bar, then I would look at trading this to the long side. If I see a close below the 3-minute bar, I'm looking at trading this to the downside. And then I follow my rules based upon that. CNBC also said 8.2. Wow. Unless somebody already knew something, that's just way out of line. And I would not see why that huge of an inventory would cause the price of oil to go up. So something's kind of messed up here. Fake news. Yeah, we got a nice strong buying signal off of the euro, giving the same push down with volume supporting that, but I don't see it on the other time frames. I do see it on the hourly. But I don't see any strong signals coming out of the euro. The euro dollar they're all trending in the same direction, so I don't see it being a strong trend. The euro yen, however, would be very strong. Continued weakness with continuation strength. That looks really, really nice. Pound yen right at this point also looks pretty strong with that nice of a trend with the weakness of that yen. That looks really good. Yeah, that's going to give a nice long signal. But if this bar closes back out within 12 minutes, I can go ahead and take this trade as long as it's less than 12 minutes. But if it's greater than 12 minutes, then I have to wait for my wide bar rule. It's a 15 minutes based on a 15-minute time frame. So 15 minutes, there's usually a correction. If a bar is painted as a wide bar in a 15-minute time frame, high probability of correction back into the body of that wide bar. And now you can see there's a 12-minute wide bar here. Price, high probability it will correct and come back down into the body of this wide bar. So our rule says no trades. You can't take a trade immediately following a wide bar. You have to wait for the wide bar to be broken in order to take a trade. It's a protective trade, and it's a rule that we've established here at Hawkeye. And to learn more about our Hawkeye rules, then please come over to our seminar here in Charlotte. Then I'll be more than glad to go in detail about all of this. Those of you who are in the room today, I can see quite a few are already coming to the seminar, so I look forward to meeting you, and we're going to be eating some good food. We're going to be talking about some good trades. We're going to be going over a lot of stuff. And for those of you who are in Europe who aren't able to make a trip over the pond to be here, I will be coming to London this summer. Probably, maybe even in fall, like around September time frame. We're going to be setting up the same seminar over in London. So those of you who are interested, then we'll be back in London in the fall, probably the September time frame. That'd be great. Get a chance to meet other Hawkeye traders in the local area, a chance to meet and greet each other, have a nice drink together, maybe share a pint or two. And that'd be great. So, Philip, how many bars do you wait on the wide bar rule until you proceed? You're looking for 3 to 5 price bars, but you're looking for a break. Okay, a close greater than or less than the bar is what you're looking for. All right, so that's same with the wide bar. You need to see a close below or a close above. That will establish a new trend, and it's got to be done within 3 to 5 price bars. If it's after 5 price bars, then you're looking for normal trade and price entry rules. David, which time frames do I personally favor for forex trading? I do have the 5, 15, 30, and 60 charts. Do you tend to trade off the 5 and 15 or also the longer time frames? All right, I have these set up here on time charts because the 5, 15, 30 matches very nicely with standard time frames for MT4 and for NinjaTrader. So this setup here is good overall because most people have these time frames set up. However, I also like to trade off the tick chart settings. So if I had a preference, I would probably be trading the tick chart rules based upon the gearbox and gear changer if I were trading in these markets for Forex. You can see the time frames that are set up are quite a bit different. If I were trading the Euro Yen, the 304, 608, and the 1216 tells me that I'm looking at about a 6-minute time frame based upon the current price action. And so I would be trading off of these charts using these entry rules to help me to identify trade entries, manage trades, and exit trades. So you can see the same signals are given based upon the current setup, and the gearbox gives me this specific trade setup. So to answer your question, what do I prefer? I prefer to use the tick charts using gearbox settings for my daily trade setups. But you can see it's fairly close to a 5, 15, 30 anyway. So a 5, 15, 30 setup. If we were to go and look at that same Euro Yen. Oh, that's the pound yen, sorry. There's the Euro Yen right there. Using a 5-minute, you can see you have nice setups on the 5-minute, aligned with your 15 and your 30 equally well. Okay, And so those were triggered, and you can see the overhead resistance target, 121 right there. So you can see price came right to it, and boom, the brakes came on. So a 5-minute 1530 works equally well. US dollar DKK. I don't know if I even have that feed, but let me put it in and see. USD DKK. Ah, there it is right there. Oh, the krona. All right. Right now, I don't have the actual Fat Man setup because we don't have the Danish krona as a separate one. So I'm not able to see its overall direction of relative strength and trend, but looking at the longer term will give me an idea from that. You can see it does have clear support and resistance, and we are trading within that range. Okay, so we are range bound between 703 and a 7065. So short term right now, it's still clearly congested. There's no clear trade signals either way. If I were doing a longer term, let me see if I can do, yeah, here's a 360 setup. USD DKK. Looks like you're still congested longer term as well. Look at that. You've got some real tight consolidation ranges. You are still congestion. So right now, there's really no clear trade setups for the Danish krona right now, either short or long term. If you're trading it shorter term, then the shorter term trades are all going to be short, very small profit. Only look for very short profit targets. I hope that helps some. You're welcome. All right, that about does it for me today, guys. I appreciate your time. Do you have any other questions or comments? I'll be glad to entertain them now, but I'm going to go ahead and stop the recording at this point.